All right, people, welcome to this episode of the Vision to Mission podcast. Today, we have an amazing special treat for you. This is actually a part two of a podcast that we did a while ago. But listen, we're taking this acronym, MEGA, M-I-G-A, Making Insurance Great Again. It belongs to me. It belongs to us. This is the first time you're going to hear it. All right. So listen, right below me or next to me, depends upon where you're looking. We've got Mr. Sean Goral of Legacy Insurance Group based right out here in Virginia, where we are. Welcome, Sean.
Thank you, Brandon. Appreciate you having me.
Absolutely. And we got my main man. We got Sirmet Bek of BEK Insurance. Listen, he's based out of West Palm Beach, Florida. I'm jealous right now, hailing from New Jersey, right? And he's going to give us some great insight, especially on what's been going on over the past month down there in Florida with Hurricane Ian and everything. So, guys, I just want to welcome you both to the podcast.
Thanks for having us, man. Thank you.
No, absolutely. And so you both are independent, right? So you both had experiences in the past working for a large nationwide, not that company, but a large nationwide insurance agency. And at some point in your careers, you decided to go independent. You decided to break off and do your own thing. And so, share with us, why you decided to do that. Like, what was it, either your experience within that company? Was it something just kind of personal? The burning within you? Was it just more like, I've got to make more money and I want to do this on my own? So what was it that really was the catalyst to get you to go out and start your own company? And Sirmet, I'm going to go ahead and start with you.
Yeah, I mean, my first taste of the insurance business was with Liberty Mutual, and I was there for a while, did well. And then I started learning about the business and saw what the independent side was doing, and it only made sense to me, being able to really help my people. Whereas with as a captive agent for Liberty or Nationwide or Allstate, you're only able to help them with one carrier. Whereas on this side, you have all the different contracts with all the different carriers. So I don't mind whichever carrier is best for my person is the one we're going to put them with. So we're able to better help the people that we're serving. And then not only that, but you're the master of your own destiny on this side too. So you're the entrepreneurship part of it. Whereas the other side, you're working for a company, you're at their beck and call of whatever they want from you, you do. Whereas on this side, you align your goals with whatever you want your goals to be. And then sometimes I'll ask my sales reps or whatever, hey, what do you guys are looking for this month? Sometimes we switch marketing campaigns to based on what that carrier wants to better build the relationships with them too. So it's just better on this side. I think it's definitely maybe a lot more work or different work, but it's better for sure. And that's the main reason why we switched to this side. Also, this is a business of renewals, so earning those renewals is definitely super appealing and nice to do once you start building on this side.
No, absolutely. And I appreciate you sharing that. And so, so Sean, I guess the same with you, or, what was really that push? What was that catalyst that really got you to say, I'm going to start my own company. I'm going to go out on my own and make this happen myself?
Yeah, great question, Brandon. I would say for me, it was control and influence, right? So when you work for an organization and you buy into their vision and their mission statement, and then all of a sudden there are some organizational changes, you are no longer in control, right? But your role as a salesperson is to still continue offering a solution that may not be in the best interest of the customer or you. And that's exactly what happened in 2017, 2018. I just felt like I had very little control over decisions that were going on within this organization. And I had less influence than I did before these organizational changes took place. So, like Sirmet said, it is a grind. In some aspects, it's more work than working for somebody else. I think there are benefits certainly to being an entrepreneur, working for an already established organization. But I like to have my creativity shine through. I like to have control and influence. And I like to do what's best for my clients, because we are in a relationship-based industry.
Right.
When changes happen and you only have one solution to offer your clients, they're going to go directly to your competitor. If you have solutions, they're going to keep that relationship with you. So it was a good investment for the years to come. And here we are.
No, absolutely. And, and I can identify with the both of you. I didn't work necessarily for one large company for a long time. I did work in the mortgage industry for multiple different companies, having used to live in New Jersey for several years and then moved back down here to Virginia. And I just, and then I was also working, for the government full time and kind of doing this on the side. So it was a lot. And it came to, it came a point where a good friend of mine said to me, you got two options. You can either jump out or get pushed out, and I really thought about that. And I was like, that was as real as it gets. And I decided, to have some faith, to get a lot of advice, to have a lot of prayer. And I decided to jump out. And when I did, even working for other companies at first, I realized I could do this on my own. I can do this myself. And, at that time, it made me think of Michael Gerber's book, The E-Myth Revisited. And I kind of had that E in the E-Myth because, I was gaining experience in working on mortgages, the actual granular part of it, but I really didn't understand the business side of it yet. And I was researching it and everything. So it really took me some time to understand how, and I'm still learning to this moment on how to effectively run a business. But I'm so glad that I made that decision. It does take a lot of faith. I think you kind of alluded to that a little bit, Sirmet. It really takes that faith. And furthermore, I was working for a company where I didn't like the underwriting. I didn't like my processor, and I didn't have that control and influence, as you had mentioned, Sean. And I was like, this is ridiculous. I'm making money for these other people, and I'm not giving them the best products. I'm not giving them the best rate. And I could do this for myself, and I can build my own brand. And that's why I decided to do it myself, 5-6 years ago. So I definitely applaud you guys on what you both decided to do. So in doing that, what are some of the lessons that you learned and kind of in the very beginning? What were some of the challenges or even missteps that you made in terms of forming your own company and your own business, as you look back now with some advice, for people who might be considering to do the same. So either one of you can go ahead and chime in on that.
Brandon, I was actually thinking about this morning, right? So what Michael Gerber says is, if you like bacon, don't open a bakery. And I think all of us in the room we're good salespeople or good producers. I think number one lesson to learn is you're going to have to work yourself out of that job, right? So you're going to have to develop on the fly leadership skills, management skills, financial acumen to run a business. And it's a never ending journey where you're going to wear a lot of hats at first.
Yes, absolutely.
Until you have enough flow to delegate certain roles and responsibilities to a full-time staff member. I would say number one lesson is hire people before you're ready. It's counterintuitive, right? It's like when you're worried about cash flow coming in the first year and you're telling someone that you need to go out and hire somebody before you have the cash. It's like, that's opposite advice. But if you fail to do so and you work in your business too long, you're going to have a people problem. And I would say also what I learned is not enough people take the time to document all of their processes. Right? It's something that's not going to pay you immediately. It's not going to be an immediate return on investment. But how else are you going to replicate yourself? Because your time is finite. And if you're going to bring anyone else into your organization, you need to have a clear system of documentable processes already set up. So work yourself out of a job and work on your business more than you work in it.
Definitely appreciate that. Can relate to that for sure. And what about you, Sirmet?
And going over Sean's thing is hire before you're ready, but also fire fast. If that person you bring on, you'll see it in the first 2 to 3 weeks. Like if they're not doing it, move them out of there. And then once you strike gold, you treat that person good and keep on developing leadership skills. Like I just keep on reading it and trying to learn as much as I can about leadership and being the best leader I can, not only for the business but for my family. It's just keep on developing. And then faith. Don't ever wither that faith. Faith in God, faith in yourself. Bet on yourself, like Lamar Jackson. He's betting on himself this year. So Darrell Rivas, in history, he always bet on himself to get that contract. So it's just faith in yourself and God, and keep it pushing and keep developing, and kind of going over the hardships in the beginning is I can help other insurance people trying to get into this business by letting them know who to talk to and who not to talk to. Don't waste your time with certain vendors. But you kind of have to explore them all too when you're doing it, because maybe the vendor that I ended up going with is not right for your business either. So you kind of have to go through those time wasting learning experiences dealing with all those people, especially in the beginning.
No, I definitely appreciate that. And let me just add a comment to something that you said, because I'm from Baltimore. And if you're listening to this, you listen to what I'm telling you. If you betting on yourself, stop throwing interceptions at the end of the game. You did it twice so far this year. All right. If you need to work on your mechanics, come on down to Woodbridge. I'll help you. Got your back. My Ravens. Love my Ravens. Anyone who knows me knows I love my Ravens. So it's something. It's funny that you guys have mentioned a couple of things, just in terms of like some of the mistakes that you've made or some of the things that you've learned. And I can, and I can identify with that. Like when well, this is like back in like 2016, 17, I went to a conference, like it was like a coaching business type of conference in Las Vegas by a guy named Ron Vainberg. So shout out to Ron Vainberg. He was my business coach for a while. Fantastic small conference. And I came out of that realizing I needed coaching. I had never had coaching in my life. I had never paid for coaching in my life. And I saw the amount, I was like, oh my gosh. But kind of in the vein of the conversations I've had with Sean, I realized I had to invest in myself. I had to invest if I wanted to grow and scale and learn. And so coming out of that, I realized I need to hire someone. And it was before I was ready. I had never paid anyone a full-time salary. I never had to train someone, and I hired him as a processor, and he's with me to this day. But it was scary because I'm like, how am I going to do this? Because I'm trying to make money for myself and to save and invest and pay bills and all this. Now I got to do that for somebody else because I didn't have any loan officers back then. And I didn't have any other, accumulated sources of revenue. So, it definitely forced me into a different space, right? It forces you to grow and it forces you, to change. So I definitely, appreciate that. What are some of the lessons that both of you have learned over the past few years, having small organizations in terms of managing? Meaning this, have you been able to build a company and an organization where you feel like it's more like a family feel, or are you keeping everything pretty much business? Do your people feel like, they can really come to you and talk to you and be open about things? Or is it more of, okay, all the decisions that you make with regards to either your 1099 contractors or your actual employees, it's more of kind of a business relationship? So either one of you can chime in on that.
Yeah, I mean, I went through a few people before, and I'm trying to develop a family culture, like, it's always improving culture. Like we keep each other accountable culture. We, taking a page out of PBD's book, call each other out. It's okay to call each other out. If I'm doing something wrong, call me out. If you're doing something wrong, I'm gonna call you out. It's just for improvement. There's nothing about it. It's just to improve and keep getting better and better and better. But yeah, going through, I mean, I struggled. I was afraid to bring somebody on. He's my best friend, my cousin. I was afraid to bring him on because I always respected the relationship and I held the relationship so high. And family and business is a rough thing to bring on. But I definitely struck gold in this guy, and I want to make him. I also want to be a kingmaker. Once you really start getting into pursuit of happiness, you want to turn. You want to make make other people's lives better, especially inside your own organization. So I definitely want to turn him into a king because he is one, and that's what the future holds for us. Is the future is bright.
Definitely appreciate that. And you, Sean?
I think it can't all be just business, right? People are not showing up to work for just a paycheck. That might be their goal initially when they're looking for a role or a career change. But what's going to hold them to an organization is opportunity for growth and self-improvement. That's where a lot of this is going to come from. And then also like knowing that their leader actually cares about them. So it's a challenge. It's difficult, but I want to create an environment where people love coming to work because they know that they're able to pursue their personal goals through their professional endeavor, and that they've got a mentor like myself who's a kingmaker and can share in some of those monumental events like getting married, buying their first home, things like that. I wouldn't want it to be just transactional. It's got to be relationship based.
Right.
Our clients are buying for emotional reasons. I don't do a lot of transactional business. And so I think the organization, people is your most powerful resource, right? So profit is made on the balance sheet, not on the P&L.
I like that.
And part of being a good leader is what I'm learning is you got to be vested in your people. Like you got to know what drives them. What are their goals?
Right.
Maybe you help them realize more of what they're worth. Also, like I had an employee. All she wanted to do was get an RV and drive around the country. So I was like, I want to help you do that. You can work remotely in this business. So she didn't work out, but it's a different story. But at the same time, you kind of you got to know your people and have a vested interest in what they want. So then you could be a better leader as well.
No, and Sean's aware of this, and Anton's aware of this, but I kind of learned that the hard way. Couple of months ago now, one of my closest and most trusted employees resigned, and it was a complete surprise. Like when I tell you, it hit me hard. It hit me hard, and it hurt. And kind of looking back on it, in retrospect, this employee, what was important to her was stability. Some people, they just want that stability. Just make sure my check is there. Make sure paychecks or ADP doesn't shut down. So every 2 weeks, what I want to get paid is there. And people have their own reasons for that, right? And people have their own lives. And so with, everything that's been going on, especially this year, I do pride myself on communicating with my team often and clear. But, this particular employee, took another opportunity elsewhere, maybe where she saw a little bit more stability because of everything that was going on in the mortgage market. But I also, in the spirit of a Jocko Willink, I do take some very extreme ownership because that was a person who was on my team for a couple of years and left on my watch, period. And so, and that's and I know not to really beat myself up too much on it, but I have to take a certain level of responsibility where it's due and have a certain amount of accountability and learn those lessons going forward, because I don't want to feel like that again. I just do not want to feel that way again. Because I do care about every single person that I bring on my team. When I've told them is that, I hire for culture first. And then I can teach skills and abilities for sure. But okay, do you fit in as well as possible with what we're trying to build and how we're trying to affect people, and the reputation that we're trying to build? And to me, that's definitely most important. And I was just listening to the Entree Leadership podcast just the other day, and they had a couple people internally kind of just sharing experiences that they've had over the past few years in terms of hires and fires and mistakes that they've made. They have a 12-point process to hire people. which is crazy, but, crazy, I guess, in a good way because it works for them, for sure. But, there've been a lot of ups and downs and a lot of different changes that we've gone through, let's say, even from 2020 through the present, right? With the pandemic coming, with all of the uncertainty that it brought, then with low interest rates kind of last year, still kind of having to deal with things. And now we're dealing with a tough economy. So, my question to both of you is, how have you been? How have you personally been doing with regards to your business, really from the onset of the pandemic, with all the uncertainty that it brought, right? Coming into last year and now this year, essentially from February through the present, we've had a variety of world and domestic economic challenges. And so how has that affected you and your business, or has it? Either one of you guys can go.
I would say it hasn't affected us adversely in the sense that there wasn't a ton of attrition. There wasn't a ton of clients that all of a sudden stopped paying premiums or decided to cancel. That was not our experience here. But what I will say is, what has changed for the good is it's kind of put healthy pressure on us to add more value to every client interaction.
Okay.
And to make it a point to have annual reviews with clients and resell them on the initial value, because people forget what they're paying for. And if you're not delivering value through the relationship, things can get transactional and people will leave you for price-based decisions. So my goal on every client interaction is to offer maximum value so that there's little incentive to ever leave. And so I think, for a lot of agencies, they're like Warren Buffett says, you can tell, it's easy to tell who's swimming naked when the tide comes in.
Right.
There's a lot of transparency now. Consumers have options, and they're going to do business with the agencies that they feel like deliver value, care about, and that they trust and have a real relationship with. I think it's a great opportunity because a lot of companies that were offering direct to consumer relationships during 2020, they had to shut down all their call centers. So call queues were enormously long. And they realized that's not really a viable long-term solution, right? And so kind of the tides are turning. I see a lot of people would prefer to do business with smaller mom and pop shops, small businesses. I think there's a big shift in the way that a lot of folks are making buying decisions. Do you feel the same way, Sirmet?
Yeah, absolutely, man. The pandemic was a blessing for my family. With finding a in-home teacher for my son, he's on the autism spectrum. We were blessed to find literally the best person ever. Then with business kind of doubled down when everybody was turned into a hermit crab. I was out and about and shaking hands and kissing babies and doing what we do, and we're able to kind of explode the business a little bit and just continue to do the same through this time. Be greedy when everybody is scared. Be scared when everybody is greedy.
That's right.
And in business, just keep faith. You have your formula. Keep pushing. Keep repeating your formula, and kind of don't. We're in the business. Insurance business is a little bit different than mortgage business. It's not so reliant on interest rates or what's going on in the economy. Everybody needs insurance. There's people who still need to drive. People still need to insure their homes. They need to ensure their have insurance on their lives as far as life insurance goes. Businesses are still trying to do business, so they need insurance maybe more than ever.
Yeah.
So kind of the business we're in, thank God, is more of a recession-proof kind of industry, but at the same time, just now is the time to really separate ourselves.
Yeah, no, and I would agree. And kind of last year, probably around that November type of time frame, there was a lot in the news, and the Federal Reserve did announce that they were going to be raising the federal funds rate, right? And so excuse me, coming into this year, I have to be honest, like I wasn't nervous or scared. It was the weirdest thing because I would think, oh my God, all my business is going to go away, you know? But I think there was a faith and then there was a reliance on the base that we've built, you know, and the relationships that we've built. And, you know, but to be completely transparent, yeah, we're probably doing 60% right now, year over year of what we did last year. So it's definitely slowed down, but it's also allowed me to get a really clear picture of kind of what's going on. Like kind of Sean, what you said, like the tide is coming in, right? And who's in their birthday suit, right? And your man Malcolm X said the chickens are coming home to roost, you know, and it's like it's happening now because there's lots of different companies that are either going out of business, mortgage companies, or have massive layoffs. And it's a shame because those are real people, right? With real families and everything. But at the same time, I look at it from a business analysis perspective, like, okay, your overhead is here and your revenue is here. And if that happens quarter after quarter, right, you're in the red quarter after quarter, something has to give. And so it's also caused me to take a closer look at my P&L, right, to look at my balance sheet, to look at my debt as a company, to look at how am I running the business, right? How am I working on the business? Because Sean, you said something that really hit me a few minutes ago. From 2020, like all of 2020, and pretty much all of 2021, I worked in my business because rates were low and we had a lot of volume. So I sharpened my skills and became more of a subject matter expert in residential lending. But what I didn't do, as I didn't put my Sirmet hat on and I wasn't out shaking hands and kissing babies and making and expanding upon the relationships like we had established ones, you know, but expanding upon those in the time when I really should have done that. So that was a mistake, you know, but now this year, I've kind of flipped it. Like, even though rates are higher, I'm out meeting more people, out trying to, you know, market more, advertise more, build more of a brand, build more solid relationships. So I really get a lot from both of you, you know, with regards to that. And so here's the thing. So let me just kind of ask you this. Sirmet, you actually mentioned this. With the current economic environment, you know, do you see that insurance is all about risk, right? When you kind of boil it all down. But with the current economic environment that we have and the current kind of, you know, geopolitical, military issues going on, do you see, you know, has there been a direct impact in terms of premiums on insurance or how banks are looking at insurance? Has it been tougher for you to get people, you know, underwritten and approved? Like, or hasn't there been none? You know, because there's so many different products that you offer.
I think you'll probably get two very unique answers from both me and Sirmet. Okay. Yeah. And I was thinking about this morning. Sirmet and I can never be direct competitors because our marketplaces are so different.
Sure.
So I can only speak on mine, but I would say that there were a lot of companies some years ago that would market their insurance products to anybody and everybody. Like the barrier to entry was very low.
Okay.
And now the majority of insurance companies have been unprofitable the last 2 years, whether it's home insurance or personal auto insurance. And so what you're finding is underwriting criteria is becoming a lot stricter, right? Like there's not companies really competing for, you know, that client that has, you know, the DUI or the reckless driving or the, you know, the frequent accident history. And so a lot of companies that want to hold on to their long-term interest, they're moving into, you know, they only want the preferred customers, people with good credit, low claims, you know, low driving violation history. And so, yeah, there's definitely a market correction, but I think it's ultimately going to be to the benefit of the consumer. I think the reason why we got here in the first place is because insurance was so commoditized with cheesy commercials that customers didn't really see the value in having a risk management program. It was just kind of like a race to the bottom of who could offer the lowest premium. And everybody loses when that happens. And now the reality is most people, regardless of your marketplace, you're gonna expect to see, premium corrections anywhere between 10 and 25% with inflation. So to prevent that from happening long term, the best advice I would give a consumer is just align yourself with a risk management professional that can help you get to the root cause of your problems. And the root cause is not the rate that you're paying. It's you improperly managing your risk, whether it's, the person that's giving you advice on how to manage your risk, or it's your own personal practices that are contributing to, high claims, high accidents, high moving violations. At some point there's got to be some personal responsibility. And like Sirmet said earlier, if you have a culture where you can call people out, everybody can get better. If nobody takes personal accountability for, insurance related claims, then it's just a perpetual cycle of the risk pools getting unprofitable for everybody. And so rates are going to go up for everybody.
Makes sense.
Yeah, same thing down here. Florida underwriting is getting super tight. It was already tight down here, but it's getting even crazy. Rates are jumping up like maybe more than 25%. I've seen sometimes 40%. It's just a super, I guess, volatile environment as far as insurance goes. But then again, that's why we're on the independent and we have the other carriers, so that if something like that does happen to one of our customers, we have the ability to move them, or consult them with, hey, you need to stop breaking the law. Or I have a relationship with a defensive driver course that I feel like is actually really helping my people. So I make it a point, make sure they get the link to do the course. They get a little incentive from doing the course, and they get a discount on their auto insurance. It's actually through an improv theater, so I love comedy too. So
Nice.
they get 2 free tickets to the improv comedy theater near them, and they do the course. And I feel like it's actually helping, because we have loss ratios, right? We see the number of accidents, how much is paid out, and I do a lot of auto insurance business. So since I've been really making a point to make sure every client gets the course, at least knows about the course or does the course, I've seen actually positive feedback on my loss ratios, whereas people are not getting into as bad at either as many accidents or as bad of accidents as well. So it's pretty cool to see that.
No, absolutely. And Anton, can you bring up that article, please? That's from the Insurance Journal. I want to go ahead and kind of segue into this, because you both, talked a little bit about the underwriting standards, and Sean, you had mentioned the building codes, right? And so this particular article that Anton's going to be bringing up, that I read the other day, has to do with Hurricane Ian. I got my glasses on and I don't know if I can see that, but I'm just going to read the headline, and we can talk about it. It says Florida building codes make a big difference to newer homes, and Ian reports show. And so, so that, even though that was on the West Coast of Florida, earlier in the year, I think, Sirmet, you and I were working on a client together who was in South Florida, right? Thank you, Anton. Buying a condo, right? And some of the quotes that I was seeing was crazy. Now, I don't, so help me to understand that in terms of a risk perspective, Sirmet, because I kind of get it, but help our audience to understand. For example, if you have someone who's in Fort Lauderdale or Miami, or South Miami, and they're buying a condo, right? They're buying a condo on the 10th floor, okay? What would make their insurance premium be $4,000 a year or more? So can you kind of explain to them why it would be that high or possibly more?
The number one thing is distance to coast. The closer you are to the beach, the higher the risk is, the less carriers want to do it. And when the carriers, the number of carriers that are so small, they control the pricing, and they basically charge whatever they want to charge.
Mm-hmm.
There is some not new carriers, but there are carriers that are getting a little more competitive. Like Allstate actually has a somewhat competitive product. Edison has some little bit competitive as well down here, Florida Peninsula. These are like the carriers that are a little more competitive right now, but they're the rates are still going up for them as well. So it's kind of like the biggest thing is the distance to the coast. The closer you are to the ocean, the higher the risk. So the higher the premium is going to be, and your insurance score goes into the rating. There's wind mitigation credits. So wind mitigation in Florida, it basically shows how hurricane proof your building is. And without that inspection report, we can do a policy, but it's usually you don't get any of those credits. So like one of the main things I tell our customers is, okay, I'll shop the rates, no problem for you, but before I do, make sure you go get this wind mitigation report and usually the 4-point inspection as well. So 4-point inspection, wind mitigation, they kind of go hand in hand. It basically shows us, the insurance carriers, okay, this house has a new circuit breaker, it has a new furnace, it has a roof from after 2001. That's when the first building codes changed for roofs, which helps in your rating. Like, if it's a newer building after 2015 or construction, usually those are the best rated homes for insurance goes, because they have hurricane proof windows, hurricane proof sliding doors. The roofs are attached in a certain way where they withstand 150 plus mile an hour winds. So all that stuff is kind of taken into account. But my first recommendation: buying a house in Florida, get a 4-point, get a wind mitigation. Shout out to Max Home Inspections. That's one of my favorite companies used for home inspections down here. They're just thorough and easy to deal with.
So, all right. But let's move across. Let's go west across the Everglades, right? And let's go over to Fort Myers, right, which is more south. And then you kind of go further north up to Tampa, and that whole area that unfortunately got hit so hard by Ian, right? So
yeah, lately
what's
the way
going to go on there with rates? I mean, are the rates going to be double? Like, kind of what's your prediction or what's your thoughts on that?
It's going to be a steady. So Florida in July, the state passed a reinsurance program basically for. So there's been so many changes. So Florida, there's a bunch of Florida home insurance carriers that got downgraded from their Demotech rating, got downgraded from an A to a B. A lot of mortgage companies won't accept a B-rated insurance company. So what Florida did was, okay, let's say one of the companies, X insurance company, we're going to help you by offering you reinsurance through Citizens, which is a state insurance program, state pool insurance program. So now they basically have Citizens backing this insurance company to help that carrier, which will hopefully help the whole market. The more carriers, more competition, the better for everybody wins. So that's kind of what happened in the state. But as far as Hurricane Ian goes, it's going to cause things to go up. Maybe the one instance is not going to make it go up as much as what people would think, because just rates are going up like crazy anyways. But they're going to probably blame it on Ian. Ian, I think, caused 50. When I checked last time, it was about 50 billion. It's probably closer to 100 billion now. Where I'm actually going to go with my buddy Fred next week. We're going to volunteer and help some people out. People are still in need of food and water and stuff like that. So we're going to check it out next week. I'll take my cousin as a contractor. Maybe we'll help rebuild some stuff as well. So we'll see it firsthand. But yeah, I don't think Ian has such a one-time blame for rates to go up. But they're gonna use it they're gonna use it as a scapegoat for sure.
Got it. And so, Sean, let me ask you this: so whether there's some type of a natural disaster, right? A hurricane, a gigantic hurricane, a tornado, an earthquake, something, God forbid, that causes, let's just use the current number of $50 billion in damage. Now, it's over a large span of land, right, of space, miles and miles and miles. So you have a lot of different carriers who are insuring homeowners. But, is this really causing losses for these insurance companies, or do insurance companies carry reserves? And are they prepared, the larger ones, for when these types of things happen?
They do carry reserves and they do reinsure a lot of business, but I think the general public assumes that insurance is a lot more profitable than it is, right? They don't realize that there are certain ratios that large insurance companies operate on, right? So for every dollar that's collected, probably 90 cents are for operational expenses to pay for all the claims adjusters, all the actuaries. So you have a very small margin, maybe 10 cents on every dollar, that if there's a year of large losses, the company can become unprofitable very quickly. And in Sirmet's marketplace, that could mean, companies filing bankruptcy. That's a large reason why there's so few options in Florida, is because the larger companies don't want to play in that space. And so I think, for Sirmet's market, there's going to be a lot of mergers and acquisitions. Hopefully that doesn't impact the consumer poorly with fewer options. But I think where we're located here in Virginia, where we don't have as many weather-related events, the best thing that the homeowners can do here is do their due diligence during the home acquisition period, right? Don't cheap out on the home inspection, but also, have some pride of ownership for, general upkeep with your house, and recognize that if you are putting in small claims, you're in a way directly impacting your neighbor, right? Because all of the claims that are tied to a certain zip code are going to raise rates for all the residents within that zip code. So a lot of claims in Virginia are preventable if, we treat our home with pride of ownership, right? So it's very few and far in between where we have hurricane related losses or severe winds.
Put in a French drain, people.
Say again?
Splurge on the French drain.
Have those beautiful looking roofs, like those Spanish style roofs, like there are in South Florida, right?
No,
For sure.
French drain, they basically like dig a moat out on all the sides of the property. They put in the piping, and it drains the property out properly. Because otherwise, Virginia, just like New Jersey, has a lot of basements. So without the French drain, a lot of times, at least in New Jersey, there would be a ton of claims from water getting into the basement and stuff like that. And usually once you put in the French drain, there's no water. Like the sump pump is there just in case, but usually after the French drain, like somebody that would have repetitive claims, once they put in the French drain, the sump pump doesn't even need to kick on anymore. It's crazy.
How much would you say that would cost for an average homeowner?
I think nowadays it's close to 10,000 or so, somewhere around there. Back in the day, it was probably like 5, but everything was so inflated now.
Right.
Again,
I mean, everything. Right.
They find all our home. A lot of properties in Virginia, especially in Arlington, Alexandria, are built 1960s or prior. So that would be a good investment. If you're planning to continue to live in a house with old plumbing or known issues.
Right. No, absolutely. Yeah. And so let's go to, I want to go to something that's kind of definitely related with what we're talking about, and just generally with regards to the economy and different things. There's a headline that I sent you guys from Bloomberg. I don't think I put the link in here. There is a link actually, right? Can you bring up? No, is that the link, Anton?
CNBC link?
No, that's another one. Well, let me just read this link that's right here. It's from Bloomberg, and it's pretty recent. It says forecast for U.S. recession within the year hits 100%. So there's a 100% chance, right? There's, that we're going to have a recession. So it's like, it's a big blow to Biden. Bloomberg Economics, sees near certainty. Let me put my glasses on. Sees near certainty, a downturn will start. Tightening conditions, right? We kind of talked about that. Even with regards to underwriting and getting approved, just generally, inflation and a hawkish Fed weigh on outlook. And so if people don't understand, let me just kind of go to the last term here, hawkish Fed. Basically, that means that the Federal Reserve is being more aggressive in raising interest rates. They're more aggressive in attacking the actual problem, even though it's going to cause what's called economic pain. If you ever hear the term dovish, it means that they're going to be lowering rates, or they're being a little bit, more conservative, but not, as not attacking it as much here. I want to talk about this with you both for a little bit, because I've read multiple articles, listened to different podcasts, heard things on the radio, especially a couple of months ago, and they were kind of talking about, well, let's see what happens in the second quarter if we had a recession, right? Because of the technical term, right? When you have the two consecutive quarters of declining GDP, right? So, and people were just worried and scared and upset. And I had a couple of people say, "Oh, I don't want to buy a house. We're going to have a recession." Like, what are you talking about? You know, helping people to really understand these things. Again, yes, it's natural that there's going to be a recession just simply because of all of the combined economic factors that are taking place. Thank you, Anton. I can go ahead and read this right here. It says, a U.S. recession is effectively certain within the next 12 months in the new Bloomberg economics model and projections, a blow to President Joe Biden's economic messaging ahead of the November midterms, which is a big deal. The latest recession probability models by Bloomberg economists Anna Wong and Eliza Winger forecast a higher recession probability across all timeframes within the 12-month estimate of downturn by October 2023, right? Up from a 65% comparable, period. And again, it just kind of talks about how that's going to be unwelcome news for Biden. So I want to kind of get you guys' thoughts, not necessarily so much politically, but you can add your thoughts there. But, with what you're seeing, and with regards to the economy, do you feel that we're going to just continually have declining quarters of declining GDP? And if yes, what's your economic outlook generally, with regards to heading into 2023? So either one of you can go ahead and start on that one.
Yeah, I mean, going by the wise words of my boy PBD, the future is bright. So this is the longest we've ever gone without a recession. It was bound to happen. The economy goes in cycles, and this is one of the cycles that we desperately needed for the times that we're in. So Ray Dalio and Robert Kiyosaki, listening to these guys, what they're kind of projecting, or maybe Ray Dalio first, and this is the creepiest thing, is he's saying there's a 50 or 60% chance of civil war. And that freaks me out more than a recession. But the recession is good, man. It's going to suck for a lot of people, but it's going to expose a lot of people. And everybody needs to just wake up and keep developing themselves. And if they have to reinvent themselves, then it's you have to reinvent yourself. It's just part of being human. We live in America, so America is ran on money. In order for the pursuit of happiness, you need, part of it is making some monies to feed your family and everything else. So if you have to sell your house and get a van and live in a van and drive around the country and forage your food or whatever you gotta do, maybe start a podcast with your family in the van, and that's how you end up paying your bills. But anything is possible at the end of the day. But recession, we need this, and hopefully everybody's safe and healthy throughout it. But and hopefully, there's always people who make a ton of money during this time. So hopefully, we'll be part of that crew.
I think there's a quote that perfectly encompasses where we are at in these economic times, and that's: good times create weak men create hard times create strong men, and strong men create good times.
Fantastic.
Things have been too good for too long. In the last 2 years, I'm sure you can attest, Brandon, you could be in mortgage or real estate. You could be in the bottom 80% and still do pretty well. Good is not good enough anymore. And so, the tide is turning. And I think your perspective will drive your performance, and your perception will create your reality. So as long as you keep faith and just turn off the news and just keep grinding, keep focused on delivering value to your referral partners and your clients, just worry about what you can control, and not so much what you can't control. But I don't think this comes as a surprise to anybody, right? It's like most people could tell we were in a recession many quarters ago, despite media's attempts to tell us that we weren't. And yeah, I think there's been a lot of weak leadership, but it's actually a good thing. There's an opportunity for people at a local level to take leadership positions in government or their school board meetings, and really reverse the problem. And it's not going to be an overnight solution, but yeah, we all have to play a critical role in changing our futures. And like we talked about before the podcast started, Brandon, like why it's important to comment on these issues is because we're all family men.
Right.
So part of our legacy is not just working to achieve things that directly impact us, but also the next generation, our children and our grandchildren as well. That's immensely important to me, that we leave them in a better place than we started.
Well, you know what? It's funny you say that. When I was at the gym this morning, I was listening to one of those motivational videos on Motiversity. Shout out to Motiversity on YouTube, and they were talking about passing the baton. And at some point in life, when you train and you run, someone's going to pass you the baton. And then at some point in life, we have to run, and then we've got to, we have to pass that baton on to somebody else. And I really feel that right now, I think if we're looking at the three of us in our lives, right, it's kind of a time where we've been handed the baton to run our companies, to build a legacy, to have impact on people's lives, to be able to build something upon which our family can stand, right? And future family members, for sure. So I really do, appreciate that. And, I look at like the current economic situation. When I really think about it, I think you mentioned it, Sean. I think it's a big combination of poor, high level leadership decisions, but also kind of just the math, just the economics of it. Meaning, I believe, and maybe Anton, you can Google this, but over the last couple of years, I believe that we've printed about $5 trillion in stimulus money, right? Or either, money that's gone to stimulus. Okay. Huh?
I think 22 trillion dollars.
Well, I don't know if we printed that much. Maybe Anton, you can look it up. But as he's looking it up, trillions of dollars have been printed. A good portion of that has been distributed to individuals, families, and companies as stimulus money, right? In one sense, you did need to stimulate and give a catalyst to the economy. But what I teach a class at my church, and we were talking about, someone asked about, inflation and kind of how does currency have an impact on that? So that's 931 billion. Can you go to Google and see how much money has been printed from 2020 through 2022? But I guess the economic point is the more dollars we put in the system through, quantitative easing, right, it makes that dollar weaker. And then you combine that with the fact that we've had issues from COVID with regards to supply chains. Then you compound that with the fact that, Putin is bombing Ukraine, right? And then we're having economic effects there. All of that leads to kind of where we are right now. And so it's kind of crazy. So as you're increasing that, what is that saying? How much does it say? Right. So look at that.
I found something that says 13 trillion was printed between 2020 and 2021.
So let's just use that number then. Can you imagine, like, if you kind of look at that particular number, I think there's some data metric that says that, that's more that has been printed like in the entire last century or, 2 centuries or something like that. Now, I do believe that these are drastic times, which definitely costs, and there's another one here. 80% of all dollars in existence were printed in the last 22 months. Isn't that, think about that. Like in existence, you know what I'm saying? from January 2020 to 20 trillion. So yeah, getting closer to that 30 trillion number in October of 2021. So just that by itself, we've kind of have a major self-inflicted wound, going on here. And that's why we have the quantitative tightening, right, with the Federal Reserve now trying to get a lot of these dollars back out of the economy, back out of the system, and having to lower demand, right, by raising interest rates, but which is now hurting. It's definitely hurting the housing industry for sure. And we've switched. Like I've literally seen the big Titanic boat switch, with the little tiny rudder, pretty much from like July, August to where we are. I can't really say anything about Florida, but definitely for the DMV area, DC, Maryland, Virginia area, it is definitely a buyer's market. With all the realtors that I work with and I talk to, people's homes are now on the market 7, 14, 21, 30 days. There's no more, crazy multiple offers and people way overpaying for homes. And I think, as you had mentioned, Sirmet, there's more of a correction, right? That's taking place. And we do need this market correction because it's good for the health of our economy. So did you guys want to make any additional comments on that before we move on?
I feel like the market, if left uncorrected, will always perform based on consumer behavior. And so when you start to manipulate the market by, adding to the money supply, using quantitative easing tactics, all you're doing is really putting the economy on life support. You're just delaying the inevitable. If you were to ask everybody that got a $600 stimulus check, would they give the money back to reverse this inflationary period that we're in? I would venture to say the vast majority would, because that didn't really help people back in 2020. Now people are spending like $600 on groceries, right? So we're in way worse position than we started in, right? And whether it's intentional or not, I'll leave that for another conversation. But whoever controls the money supply is really in control.
No, I agree with you 100%. So the last headline here we're going to look at is, and student loan, forgiveness. And Anton, if you could bring that up, there's a CNBC article, that says, that the student loan forgiveness application has officially launched. So it's officially jumped off, so student loan forgiveness application officially launches, putting relief in sight 40 million Americans. Some of the bullet points of that are, right here, it's like tens of millions of Americans can now apply for student loan cancellation. And I think it's, there's definitely a limit on that. In addition to your full name, date of birth, you'll also have to provide your social security number when you apply. Proof of income will not be required unless the Department of Education follows up with an additional request. So if you're making big Billy Goat notes like Sirmet and Sean, don't matter. Get your student loans forgiven. Now, there are arguments out there for this and against this. So I just wanted to see, do you guys have a particular opinion, with regards to millions of people potentially having up to a certain amount, a dollar amount of student loan forgiveness?
And I got a lot of opinions on this topic. Where should we start?
Go ahead, bro.
Let her rip.
I think
nothing, but go ahead, Sean.
Our upbringing was much different, because boomer generation had a high importance on education and becoming, first generation college educated. I think the tides are turning and younger people are realizing like there's very little value in a college education. But to forgive a personal decision to willingly go into debt, I don't think is right, because you're teaching somebody how to not be accountable for their actions. Right. So like it is easier to get a loan for $100,000 in college tuition than it is to get a $10,000 bank loan to start a new business. That's completely the reverse of what it should be. So it's like, where do we draw the line? Do business owners get a pass or forgiveness for all of the mistakes that we made with business loans? I don't think that would be right either. It's just, to my earlier point of putting failed policies on life support. The young kids know, like, if I go to college for 4 years, there's very little value in that education. I'm gonna graduate with outdated skills that are not necessary to the market. And a lot of young people are doing better financially, starting their own businesses, or going to work as an entrepreneur in someone else's company. So I think that what we will see in the next 10 years is the amount of college applications. If we track that metric, it's going to go way down.
Sean, I don't know if that's the majority thinking yet with young kids. As like first generation or even second generation kids, like even kids in my family, they're still trying to go to college because their parents want them to go to college. And I'm in the same boat as you. I don't think it's as valuable as it used to be. And maybe a waste of money for the most part, unless you have a plan. If you have a plan to be an engineer, to be a doctor, go to nursing school, or a rocket scientist or something like that, where you have the plan. If you have no plan and you're just trying to go to college to figure it out, not so much. Go work for a small business, you figure it out quicker. Go deliver some pizzas.
The one course I think everyone should take is Econ 101. All right. And what do they teach you in that class? There's no such thing as a free lunch. Right. So if we applied that same principle towards all our economic decisions, we would realize, like, hey, if we're going to cancel student loan debt for 40 million Americans, who's paying for that? People will tell you, government's being generous and paying for it. No, you're paying for it, right? And so I think the long-term implications can be devastating, where, maybe our children are in a tax rate closer to 60, 70, 80%, which, if you're paying more in tax than you're keeping in personal income, that's extremely concerning.
Tax rates is a whole other ballgame. 2026 tax rates are going to go up. Right now, tax rates are still the lowest they've ever been. 2026, if Congress does nothing, all they have to do is nothing, the rates are going to go back up to, I think, 40-something% for the lowest bracket. So that's a whole nother conversation that we had. But
I see we're having a different administration, but so this is not my belief, but I'm going to go ahead and play the government's advocate here. Okay. Government's advocate. So, and again, this is not my belief necessarily. Could be, could not. Government's advocate. The government may say, well, I'm going to operate this just like an insurance company. What does an insurance company do? It does two things: spreads risk, right? And please correct me if I'm wrong. So for every person who, God forbid, their house burns down, and you've got to the replacement cost on that house might be $300,000. Well, you've got 300,000 clients who $1 of their premium, right? That risk, since it gets spread, would technically go toward paying for that person. So do you think the federal government saying, well, you know what, we're just spreading risk, right? Because we have so many tax-paying Americans, if we then reduce the amount that they owe, in theory, they would take that money and then put it back into the economy. If they put it back into the economy, then it's going to bring more tax revenue. So it's actually going to pay for itself. Do you think that's a correct theory or assumption, or are there some holes in that?
I think it's opportunistic. It depends on everybody's personal situation, right? So, I'm of the big belief that it's not how much you make, it's how much you keep. And so those that are struggling financially to pay student loan debts, I'm sure that if we looked at their personal finances, we could see where there's some superfluous spending, and the student loan debt is not the root cause of the problem. Does that make sense?
Well, let's talk about that. I mean, go ahead, Sirmet. I know you have a
Page extreme ownership right there, bro. Yeah, but he's absolutely right. The problem goes further back, right? We need
absolutely.
the education system needs to teach personal finance and spending habits, but we built an economy on spending, so they don't want to teach the kids that. They want to teach the kids keep spending. Don't worry, somebody's gonna take care of it. And that's not the case. We need to teach extreme ownership. We need to teach personal finance. And when I was 18-year-old in college, Rutgers University, there's Citibank is sitting in the hallway. Citibank is sitting in the hallway signing up kids for credit cards at 27, 28% interest. How is that legal? How isn't that predatory on kids? 18-year-old kid. What do I know? I should have known if I got the education in high school about personal finance. So 28% is not a good decision to make. But Citibank giving me $3,000 at 28% all day, no problem. I get it. I need a credit card, bro. I need to go buy drinks at the bar. I need to line up the bar and buy all my crew drinks and stuff like that. So what else do you know at 21, 18 years old? We should have known better. We should have been taught personal finance, and I guess some schools are doing it, right? It can't be all the schools are bad, but the majority is, I guess, they don't teach personal finance. Is mine.
I think that one of the things I had a conversation. This was wild. This is 3 years ago, about 3 years ago, more or less, with a client of mine, and she works at Northern Virginia Community College, and she works on admissions there. And yeah, this was actually 2019 coming into 2020. And so, one of the things that she and I had a long conversation about was there are a lot of kids that had been realizing even back then coming out of high school that let me just get my prerequisites, right, and my Econ 101s and all of those things done in a community college, right? Then go ahead and transfer, for example, to a George Mason, transfer to a Georgetown, transfer to GW, like the schools in the area, right? Because the cost is like 1/10, and if you look at it, to me, it's really about the ROI. And I think you mentioned that before, Sean, like what's the return on your investment? Especially, I went to Syracuse University, undergrad. I went to American University grad school. But what's the return on investment, especially for undergrads, for your first 2 years? Your first 2 years, right? Like you're at the bar, you're at the games, you're hanging out playing ping pong until 3 a.m. Not everybody, that wasn't me. But a lot of the classes you're taking are like very basic level philosophy, this and that, things that you'll never use. You may gain some analytical thinking, but you don't start to dig into your major until your junior and your senior year, maybe a little bit of your sophomore year. So to me, that's free money for the university for the first 2 years. Tuition, room, board, and everything else that you spend on campus. And there's another podcast and video that I'm going to be doing specifically on the cost of college education, but like the average cost, like when you average it all out from the Harvard universities and the Ivy Leagues on down, the average cost is somewhere like $28,000 to like $35,000 a year, something crazy, especially if you have out of state. So let's use a number of about 30 grand a year, and you multiply that times 4, right? And you have somebody with a 28% Citibank credit card coming out, unless they got some Pell Grants or some scholarships or something, they're coming out with $120,000, right, gross in student loan debt. And so what's their monthly payment going to be? What kind of interest rate? They're going to have a 5 or 6 interest rate over 15, 20 years. Yeah, right. And it's like, but how long? How long is it going to take for them to pay that back, depending upon what field they go into? But go ahead, Sean.
Brandon, I would feel completely different about this subject if the universities that serve these young people this education looked at their analytics and saw, okay, well, how many of our graduates are unemployed? We got some philosophy majors here, some history majors here. These are pretty much useless education, so we're actually going to refund you back your money. You know, if the universities and colleges were taking responsibility.
Can you imagine that?
I would feel completely different about it, but
Sean, I just thought of something. Sorry to cut you off. Or they either the refund or they ran the college like a job placement business, like a headhunter business. They have the relationships where they're calling for you, trying to place you there. I have this graduate, this, that, the other thing. I actually, placed you. Rutgers didn't do. I ended up finishing at Montclair State. They have a career fair, right? But it's just like, oh, we're gonna do this career fair, and you're gonna interview for all these random companies that are here. They should, if they're making all this money, turn it into like a headhunter business. And who knows? They get a ton of money from all the companies anyways. So I don't know. It's just
they're keeping their money. I mean, it's just what this plays out is like any government spending is just it's taxpayer money. So you and I pay for it indirectly.
Yeah,
It's another thing to be a business owner.
Yeah,
take those tax deductions that you were legally entitled to.
That's right.
Right. What I was going to say, one of the biggest points of contention and one of the biggest requests I think that Biden is facing is allowing student loan debt to be discharged in bankruptcy. Because you can't put any federal debt in any type of Chapter 13 nor 7 bankruptcy, to my understanding. And that's a big deal because I think what it does now, it kind of holds the feet to the fire. Right. Like you kind of was saying, Sirmet, it's like, and especially if these universities have more accountability with regards to these loans. And if there's a loss that they will take if people go into bankruptcy because they're not able to repay those loans, then they're going to be more mandated and they're going to have much more of a responsibility to ensure that graduating student is successful financially and in their career so that they can repay what they owe. But I also agree with you, Sean. It's like I come from the school of thought, like when they were allowing for forbearance on mortgages and forbearance on student loans, I didn't take advantage of it at all, me personally, because I believe in repaying my debt, and not just letting it sit there, even though it wasn't accumulating interest. But I'm like, I'm just not going to let it sit there. I owe this money and I want to get rid of it as soon as possible. And I think that people need to have more of that mindset versus the give me type of mindset that you guys have both, that you both have talked about. So, it's going to be interesting to see what kind of effect this has on the economy. And I think, what kind of effect will it have? We really won't probably see it until like kids in middle school coming up into high school, coming into college, right? It takes some time. But I do believe that less and less people are going to be applying to go to college because there's just too much and not getting anything back for it. But go ahead.
My secondary opinion on this, Brandon, is it seems to be a play out of desperation with midterms 2 weeks away. And if you look at the timeliness of a lot of these decisions to pardon drug offenders that were incarcerated for certain things, it all just seems very conveniently timed. Right? If we were to look at polls and see how certain leaders are ranking amongst favorability in the public, this is to me a desperation play to boost numbers at the polls in the coming weeks.
It seems like it's politicized. Any move they're making is just like, oh man, try to get more votes.
But it only appeals,
and I think there's definitely a mix of that.
It only appeals to the segment of the population that takes the least amount of personal responsibility.
Yeah.
We'll see.
And there's a lot to be said, about that. Oh, did we lose you? No, we didn't lose him. No, I was just saying there's a lot to definitely be said about that. Yeah, especially we have the midterms coming up in a few weeks. And, my understanding with Biden is that this was a campaign promise. However, the timing is great timing as far as, that's concerned. But, typically, when you look back historically, when you have a president that's in his first term, they tend to lose Congress anyway during the first set of midterms, historically, for decades and decades. So this is not something that's a big surprise. But I think as we come up, especially, I think the last president, we're not going to get into this, but the last presidential election that we had was absolutely critical to the country. And I think the next one is really going to really paint the picture with where the country sees itself wanting to go in the future, and, there's a lot of talk around your boy, Sirmet down there in Florida, for sure.
Uncle Ronnie.
Say again?
I said Uncle Ronnie.
Yeah. I was going to say, what's his first name? I just know his last name. There's a lot of talk about DeSantis, boy. So yeah, we might have to talk about that another time.
He's got that momentum, man. If I was him, I would definitely try running because like Obama. I think when Obama got elected, he had one term as a congressman or senator.
Yeah, in Illinois.
He just ride that momentum, the momentum wave.
Yeah, well, truth be told, right? Like Obama rode the change wave, and so did Trump. He rode the change wave in a different way. I mean, if you want to kind of look at it from an honest lens, and if DeSantis runs, or someone like DeSantis, I promise you, they will ride the change wave, and a big giant surfboard.
Not to keep it on the political subject, but you see, I just saw Tulsi Gabbard left the Democratic Party. I was like, wow, that's crazy.
And that's not surprising, dude. She always sounded like a Republican. She sounded like a disgruntled Democrat.
Right.
And I think this was I don't know if this was this might have been PBD or somebody I was listening to, but they were like, how can you you can't lose your superstars. Rogan right on your team, and now she's on the other team. Like, what are you doing?
Yeah.
And I think that's indicative of what's going on with the Democrats, because they've lost their identity, or their identity now. Their narrative is being dictated and created for them, and they're just becoming much more and more diluted every single day. And that's going to.
It's almost like the parties have switched their values.
Mm-hmm.
Kind of, like back in the day, I feel like the Republicans would play the way the Democrats are playing now.
Right.
It's weird.
No, it is. And so, yeah, I think it's interesting times. It's interesting economic times. It's interesting social times. What's going on over in Eastern Europe, is a shame. And I just hope and pray every day that it doesn't escalate.
Bringing it back to independence, bro. I hope independent party comes out firing somehow.
Well, there's a third party, right? The guy who was running for something in New York. I don't know if it's called the Green Party or
was it Ron Paul's Libertarian Party?
They've been around.
We need more parties, bro. We need more parties. Get rid of the Electoral College, and we need more parties, bro.
Well, we need to go back to like the 1700s, 1600s, like the Whigs, right? The culottes and the sans culottes.
Definitely not. Go back to the 1700s. We got to go back to barbarians.
Well, what is Sean's favorite books? Barbarians and
bureaucrats.
There you go. So, well, look, guys, thank you so much for your time. Definitely appreciate, your thoughts. Definitely appreciate your experiences. Your comments and your, what you brought, to this particular podcast, and even how you're out there every single day. You're serving people, right? We're serving here in the DMV. Sirmet, you're serving down there, in Florida. Appreciate your friendship, and definitely look forward to doing this again, for sure. Look, making insurance great again. I do not ever want people to look at men and women who sell insurance, through some type of, lens as if, they're cheap used car salesmen. Definitely not, because there's so much value that's there, across the board in your life. So I definitely highly respect you both and what you guys bring to the table. So
thank you, brother. It's always a pleasure talking to you. Value, respect you, man. I know you're doing it, bro. And you got your future is bright too. All of our futures are bright.
No doubt, no doubt. So thank you, everybody, for listening to this episode of the Vision to Mission podcast, Making Insurance Great Again. Love you guys. Look forward to talking to you all again soon. Take care.
Thank you, guys.
Bye.